Thank you for having me, and thank you for the interest in having this conversation about how we can invest in stable, invest in these turbulent periods, and how we can actually derive a return during these periods, and what we need to do to be able to do that. So my name is Nahashon Mungai. I'm the Executive Director of Global Markets here at Standard Investment Bank. And within the Global Markets Department here at Standard Investment Bank is also where we run the MansaX Fund, which is the most recent multi-asset strategy fund that we've launched in Kenya. So I'll start by telling you about Standard Investment Bank, who we are, very quickly, and then I'll introduce you to our team, the people who run Standard Investment Bank. And I will also share with you some of the banking and investment banking solutions that we have, and finally get to what I really want to talk about, which is a MansaX fund. And it is through talking about the MansaX fund that I believe we'll be able to tackle the topic of the day. So Standard Investment Bank is one of the largest investment banks in Kenya. We are actually an indigenous investment bank with over 850 million shillings worth of shareholder funds, who were licensed in 2005 as an investment bank and are a member of NSC, CDSC, which is a Central Depository and Securities Corporation, Kenya Association of Stockbrokers and Investment Banks, and various other capital markets bodies. Our client base includes governments, fund managers, corporations, financial institutions, high net worth individuals, as well as retail investors. So what you have in front of you there is our journey. So we were actually launched as the Standard Stocks back in 1995. So we are actually celebrating our 25-year milestone this year. So we'll be 25 years old this year. And back then we used to have only about 5 employees. So that's where our journey started. And about 8 years later, we were then licensed as an investment bank. We have been awarded several awards, such as the best investment bank in Kenya, the best performing stockbroker in Kenya. And we then moved our offices to ICA building, which is where we still have our main offices. We have advised the largest capital markets transactions, such as the Kenyan 28 billion rights issue offer, and a few other transactions that I will run you through later. In 2018, we were licensed as the first online money manager in Kenya by the Capital Markets Authority. And then just to clarify, the Capital Markets Authority is a regulatory body for all the capital markets participants, whether it's investment banks, fund managers, stockbrokers, or anybody who is in the business of transacting in the capital markets. They're the regulators. And then in 2019, we achieved another milestone of giving the highest return for any local fund manager of 24% through our MansaX fund. So there are certain highlights of that SIB has successfully closed. For example, we have closed over 60 project transactions worth over 200 billion shillings, such as IPOs, bonds issuances, private placements. For example, the Kenyan IPO that was advised and transacted by ourselves, the ABC Bank bond worth 1 billion shillings, several rights issues, including financial services, banking, insurance, and other sectors. We also do a lot of work in corporate finance advisory business, such as takeovers and mergers. Very recently, I'm sure you saw Kenol Corbill merger. That is something that we have advised. We've also done delistings for certain companies like Coal, Unilever, Scan Group, Access Kenya. We also do a lot of work around business valuations. That's still through our corporate finance department. I had mentioned earlier about the Kenol Corbill, but those transactions right there in front of you are others that we have done. We also do employee share option schemes for various institutions, the largest one being for KCB. And we also help in restructuring. We recently did that for LabTrust, CPF, KPLC, and we continue to advise several companies around this. So that's our team. We try to fit everyone in that picture, and that was very difficult. So we don't have, that's not everyone, but most of everybody in SIB is captured in that picture. And it's a very diversified team, mostly finance industry professionals who work very hard every day for our clients to help our clients beat markets and be able to also grow the regional capital markets. That is our board of directors. So at your top left corner, you have the founder and managing director, Mr. James Wangunyo. So he founded this company in 1995. He is also a former chairman of the NSC and played a big role in actually leading to the development of capital markets locally. You also have Job Kihumba, who's also our executive director of corporate finance. He's also been a chairman of the NSC. So on our board, we have two former chairmen of the Nairobi Stock Exchange, and there's no other local investment bank that can brag of having achieved that feat. And then Donald Wangunyo, Pauline Moy, myself, Nike Wangunyo, who has also joined us for this call, as well as Pauline Moy as well. I believe she's on this call. We have Eric Musau, who is our AD for research, and an independent director, George Akello. So we take corporate governance very seriously, and it's one of the things that has always been a backbone of how we run SIB. We like to comply with corporate governance rules, both from a regulatory perspective as well as just proper running our business. So we have various departments within SIB. One of the main ones is our equities desk, where we trade in company stocks and derivatives. And we were the first institution, actually, this is last year, to actually trade the first derivatives futures trade in Kenya. We are a very strong fixed income desk. This is a desk that buys and sells government bonds, corporate bonds, and treasury bills. And in this perspective, we also advise and play a big role in working with the central bank to also advise on the best papers to float in the market and so on. We have our corporate finance department. As I mentioned earlier, that works with Kenya's largest public and private institutions to inform their strategic growth, structure their balance sheets, raise capital, and restructure their enterprises. So these are things that we do, and we can always do for RYA Group within the businesses that each of you run individually. We have a very strong research desk, providing due diligence, very rigorous due diligence, so that our investors have proper insight and clarity as they sieve through the various investment opportunities available to them. So once we are done with this presentation, we can actually take your contacts, and we'll be happy to share our daily trading briefs, fixed income wraps, weekly equity market reports. And this is information that's useful for any investor, so that at any one time you're able to make informed decisions as you try to invest in the local markets. And then the global markets division. So this is actually the division that I run. One of the things we do in this division is actually offering currency hedging solutions. So we have investors who, by the nature of their business, they have FX exposure, and we help our clients to create hedging solutions around this. Then through our flagship offering, the MansaX Fund, we are able to, from a discretionary perspective, give our customers exposure to most of the world's currencies, precious metals, commodities, global stock indices, and selected single stocks from around the world. And this is also an industry first, and we are the only ones licensed by the Capital Markets Authority to actually offer this exposure to clients. So now let's get down to talking about MansaX. What is MansaX? So it's a global multi-asset strategy fund that uses a long-short trading model. that invests in global online foreign exchange markets with the primary objective of capital growth for its investors. In this regard, SIB is the first online trading money manager licensed by the Capital Markets Authority. And this is under the CMA Online Forex Trading regulations of 2017. So this was specifically created for a number of reasons. The first one being there was a lot of unregulated activity around online trading, and whereas it can be argued that it's investors should decide what they want. The trouble is if you have a lot of entities that are passing off as proper money managers in a product that's not regulated, then investors can end up losing their money with no recourse. So the Capital Markets Authority was then put to task by the National Treasury to create regulations around this. So they came out in 2017, and it's from these regulations that we actually got our license. So the fund provides exposure to global markets through six asset classes. So these are the 6 asset classes that the fund actually invests in. So the first one is currencies. We're able to offer investors exposure to the world's major currencies. So the dollar, the euro, the yen, Swiss franc, Canadian dollar. So you can get exposure to all these asset classes, all these currencies through the MansaX fund. Ours is also the only fund in Kenya that actually gives you direct exposure to precious metals such as gold, silver, platinum, and palladium, commodities such as natural gas, oil, coffee, global stock indices. I'm sure you've seen a lot of activity in the global world markets. You've seen a lot of activities in what's happening in the New York Stock Exchange, in the Dow Jones, in NASDAQ, across in Europe. You've seen what's happening to the German DAX, the French CAC 40. Our fund is able to give clients direct exposure to these asset classes. And then a very recent addition to the fund is direct exposure to global single stocks. Like right now, we are talking on the Zoom platform. If any of you was asked, maybe, do you have exposure to Zoom? It would most likely you would say, I need to go open a US stocks trading account and so on. But if you are invested in Mansa, we can actually take a position in Zoom directly on your behalf. And again, this is an industry first. We're the only ones doing this. So any major world stock that you can think of, like Tesla, Cathay Pacific, any Facebook, Netflix, Google, all those stocks we can actually give you direct exposure to. Then the 6th one, which is very important for us because this is what we use to dilute the risk for our clients, is what you call cash and cash equivalent assets. So what are these? This is cash held in various banking institutions, as well as investments in government bonds, risk-free assets generally. Why do we have this in our portfolio? This is really to diversify and reduce the risk exposure that our clients are exposed to. So what are the features of the fund? What we like to emphasize as one of our advantages is the fact that we are a very liquid fund. We have a 6-month, so I'll just put all of them out here. So we have a 6 months lock-in period, but we don't have a redemption fee. So a 6 months lock-in period is what we recommend, but we are very happy to pay out an investor who needs the money for some sort of emergency. And this is one of the things that we consider to be very important, because a lot of funds that are able to give the kind of returns that we do are not able to give the kind of liquidity that we've been able to give our clients. We charge an annual management fee of 5%. That's prorated over 365 days, so you don't pay it at once. You essentially pay a fee of 5% divided by 365 every day. So that's a fee that you pay. So it's prorated over 365 days. The minimum investment is 250,000 shillings. And what have we been able to offer our clients historically? We've been able to give them a return of 24%. That was in 2019. This year, first quarter of 2020, we returned 24.5%. And all these are annualized returns, just to be clear. We also give our clients quarterly statements and valuations. We provide fund fact sheets, which are also updated quarterly. And some of our investors are interested in this, but others are not. So this is really dependent on the investor. This is the receipt of regular global markets commentary. So some investors are interested in some of this information just to keep them updated on what's happening in global markets. If you look at the Business Daily on Fridays, on the global markets page, we do an article every week, and that gives you an idea of the kind of reports that we give our clients, because that's what we put out to the public. But to our internal clients, we send even more detailed information on a weekly basis. So what are the benefits of investing in MansaX? Why put your money in MansaX as opposed to putting your money in any other local fund? So one of the biggest advantages, and we like to emphasize this, is that MansaX offers you real diversification. It's one of the few funds in Kenya that has so many financial instruments within it that you create a genuinely diversified portfolio. And when we started this fund, part of the inspiration of starting this fund was because we had realized that there was a lot of investor fatigue with Kenyans. I like to use that example of when most Kenyans wake up in the morning, they'll use Uber to grab a cab to go to work. When they go home in the evening, they'll be watching Netflix. Right now, we're having a meeting on Zoom. So Kenyans are very tech savvy and they're very exposed. Most of them are global citizens. But then when you meet most Kenyans and ask them what kind of investments do they have, they'll tell you, I have some land, I don't know, I bought it in Kamulu or something like that. They have very traditional investments, and this has not worked for them over time. Whether it is maybe they have worked in terms of running with a trend and therefore making what you call revaluation gains, but sometimes you find that some of those investments that they've made do not have a good liquidity return payoff matrix. And it's only recently that Kenyans are now coming to realize that there must be a better way of investing. There must be a better way of diversifying their portfolio. Now MansaX does this for you. Okay, we're not trying to turn Kenyans into complex portfolio managers. We do this work for you. So that's one of the biggest advantages. The other advantage is the fact that our markets are always open. So it's a 24-hour market. If you're done with Sydney in the morning, you'll move on to Tokyo, will be open, London thereafter with Nairobi, New York. Essentially, it's a 24-hour market. Okay, even as we speak, as I'm speaking to you, we still have markets open that we are trading. So right now we are trading New York. We invest in foreign currencies, and this is also an advantage because you intrinsically adjust your return for case depreciation and inflation. So if you're invested in this, so some people will ask, how do you make a return of 24%? Part of it is because of the fact that you're invested in foreign denominated assets, because this is a Kenya shilling fund. So part of the return is due to you're invested in foreign denominated assets, and generally over time, because we are a frontier market economy, then you will find that if you're invested in such foreign currency denominated assets, then you will intrinsically already be making money. So as an example, the shilling has depreciated by over 3% this year alone. So if your investments are just in shillings, it doesn't matter. Even if you had invested in the 3-month T-bill with a return of 6%, you've already wiped out that return purely on the depreciation of the shilling. So those are some of the advantages intrinsically. And then the fourth advantage is leverage. The fact that the fund allows us, and this is something that we are one of the few that are allowed by CMA to do this, the fund allows us to trade amounts larger than the capital invested. What does this mean? Say how does leverage work? So if I'm invested in a certain asset, say I'm buying gold worth 1 million shillings, okay? I don't have, because of the tools that we have available to us and the regulatory licenses that we have available to us, I don't have to go and take my investors 1 million shillings to buy 1 million worth of gold. I'll take my investors, say 100,000 shillings, all right, and leverage that 10 times. And therefore, with the 100,000 shillings, I'm able to invest in 1 million worth of gold. But you see what that does to me. That leaves me with about 900,000 shillings that I can then invest in another asset, preferably a risk-free asset, therefore allowing me to have an edge in terms of the return I can make while still protecting downside risk. Those are that's one very unique tool that MansaX has that allows us to give a better return and not necessarily increase the risk that the fund is taking to give that return. Then another advantage that Mansa has is that you can trade when markets are moving up or they're moving down. Okay, so just to explain, most fund managers in Kenya are what you call long-only funds, meaning that if you're invested, say, in Old Mutual Equity Fund, all right, and this is not to downplay the job that they do, it's just a demonstration. So say if you're invested in Old Mutual Equity Fund, you can only ever make money if the underlying equities are gaining in value. Okay, you cannot make money if the equities start losing value. And the reason for this is because you cannot trade markets short in most of the Kenyan traditional asset classes. But now the asset classes that are available within Mansa, the 5 asset classes, okay, part of the 6 asset classes I mentioned earlier, you can actually make money when markets are moving down. A good example is when oil crashed just about 2 months ago, and you were then able to sell at the top, which is called shorting, and then buy back lower, and you can make significant returns doing that. So what this means is that there's never a dull day in terms of available opportunities to trade on behalf of our investors. Then another very important advantage is liquidity, ability to access your funds at any time without any penalties. And the reason I like to emphasize that this is very important is because for a very long time, Kenyans have been very focused on returns. So everybody is always talking about, I want an investment that gives me a very high return. Can you give me 30% return? And please do not lose any of my money. That's a common story with Kenyans. But very rarely do you hear Kenyans saying, oh, can I be able to access my funds when I need them? And this has led investors to end up in maybe high yielding investments, but without the liquidity. So which means that if they had any financial emergencies, then they find themselves in a very serious quagmire. And this is one of the advantages of MansaX, just the fact that it's a very liquid fund because we trade the largest markets in the world. FX is a huge market. There's no chance I'll tell an investor, listen, I can't give you your money because we have positions we need to exit and we can't exit. We will never give you that reason because we deal with liquid assets. So that's another very major advantage for us. Then, of course, another advantage that cannot be ignored is the fact that we are local. All right, the things that we do, the asset classes that we trade, and how we trade them is something that can be done and is already being done by most hedge funds in London, New York, Frankfurt. This is already being done elsewhere. Okay, but the disadvantage is if you were to send your money to any of these funds, you don't know who those people are. You've never met them. You don't have any recourse. Now, for us, we are based locally. If you have any questions or you have any concerns about your investments, you can come to us. You can come see us at our offices. You can reach out to the regulator. And this gives investors a certain level of comfort and recourse in case of anything. All right, so there's always a concern by investors that MansaX has a very high return, and therefore you must be taking on more risk than you should. But that is actually not the case. We actually like to say that we always watch the downside, and we firmly believe that if you watch the downside, then the upside takes care of itself. that's an internal slogan, and we mean this. So we are constantly working with this within agreed risk tolerance and risk limits. We act with a lot of due skill and care at all times. What this means is that even the people that we hire, and we are very careful who we allow to take trading positions on behalf of our clients. We really hire the best, and we make sure that at any one time we treat this money as if it's our own. In fact, just as a matter of fact, we ourselves as SIB were the first ones to invest in Mansa way before we took this product to the public. We honed and polished our risk management skills using our own money before we admitted anybody else's money into the fund. And just back to the risk tolerance and risk limits, a lot of this is automated, meaning that as traders are trading, a lot of the ability to exit a position if it's losing money is, I'll focus on the losing money bit because that's what should scare an investor. So if a position is losing money that a trader has gotten into, there are set limits even before he gets into that position. So if that happens and say the trader is hesitating or needs, for whatever reason he's not on his desk, then automatically those positions are shut off, which is what you call stop loss limits. And all this is very automated. We do this to reduce a lot of human decision making around risk management. So it becomes very scientific how we do it. So I mentioned we trade our clients' money as if it was our own. We comply with all the laws and regulations. We go through CMA inspections every month. We have to send returns. As we speak, we've been going through a CMA inspection almost the last 2 weeks. And we are, in the asset classes that we trade, we are the only ones who go through these inspections. Then, as I mentioned, we identify risks and deal with them on a timely measure. And this point is important because a lot of how funds are managed is that risks are identified after the fact. Okay, and sometimes this might not be very useful. There's no point in identifying that a trader has taken an outsized position at the end of the day. Then by that time, it's too late. I'm sure you've all heard about all these horror stories of how funds have lost money because something was discovered 2 days later. All right. So the systems we've implemented, the fund management softwares we've implemented, actually monitor and identify and manage risk on a real-time basis. Okay. This is to prevent reporting risk after the fact and now report it as it is happening. And this is very important to us. And it's something we heavily invested in as well. So we manage risks across the board, from the people that work for us, from an operational and administrative perspective, as well as ensuring that we're in compliance with the regulatory framework that we allow. So, as I mentioned earlier, we have very experienced people, and most of the traders that we've actually hired from commercial banks, including myself. The reason for this is because banks have always traded the assets that we are trading for clients in MansaX. It's something that has always existed. And I'm pretty sure you have noticed that banks do not lose money. There's a reason for that. Banks run a very conservative trading model. So how a retail trader would trade is very different from how a bank trader would trade. Yeah, a bank trader always comes from the perspective of how much can I lose in this trade? Whereas it's quite the opposite with retail traders, where they come from the perspective of how much can I make in this trade? And we find that the prior approach of saying how much can I lose in this trade actually ends up protecting your downside. And over time, you might not make outsized gains, but you also do not have any outsized losses. So that's important for us. Then we have invested in very good IT infrastructure, advanced risk management software, data analytics, and insight-driven decisions. Very strict limit setting, limiting how much each trader can get into in terms of position sizes, how much any exposure from any asset class is. So there is a good reason for this. So some funds, for example, will make outsized gains over time because of having very concentrated exposure to certain asset classes. All right. Now, within MansaX, we have very strict portfolio limits for any asset class. So we do not allow asset classes to exceed a certain percentage of the overall portfolio. So what this does is it might limit how much you actually make. And I'll give you a very good example. So we have always invested in gold. We started buying gold in 2018, and we started buying gold at levels of 1250. If we were investing in gold only, we'd probably have made a much higher return than we are reporting now. But the reason why we did not do that is because in case of anything happening to the price of gold, then it does not affect the whole portfolio negatively. So that's why we have limits for asset concentration, and this prevents us from having concentration risk in any of our financial instruments that we trade. Then our trading methodology is aligned to a maximum drawdown amount. What this means is that we do not allow the portfolio to be exposed to beyond a certain percentage. So on a daily basis, so the Capital Markets Authority actually allows us to expose up to 10% of our portfolio every day to potential losses. But internally, we never exceed 1% of the portfolio. So you can see how conservative our trading methodology therefore is. It means therefore for us to say lose our clients 10% of their clients' funds would literally have to be losing our maximum set limit every day continuously for 10 days. Now, I'm not saying that cannot happen, but you can see how unlikely that therefore becomes. Then we're very transparent. As I mentioned earlier, we invested in a fund management software that is fully automated. So even the client statements that you receive are fully automated and are not manipulated in any way. And if the clients their value, okay, they are informed. Say if this happened before the quarterly reporting period, they would then be informed and would have an option to withdraw as usual without any penalties. So this is how we have performed historically, yielding about 24%. After fees, it's around 20%. Okay, I don't say 19% because 24% is really just the average of an entire year, and sometimes you have low months as well as high months. But still, even after our fees, we still more than double. For example, the 10-year risk-free rate, which we feel is a good enough margin to justify investing in a slightly riskier proposition like MansaX. So how have we performed this year? In Q1 of 2020, we gave an annualized return of 24.45%. And that is how we have performed over time. So we got our license in 2018, but 2019 is when we have given that fact sheet performance update. So you can see there are ups and downs, but essentially giving an average of about 24%, which again is still market beating. We are still trying to replicate how we did the first quarter of 2019. But again, the amounts were much smaller. It's much harder now. So one of the things that I like to give investors comfort is that increased market volatility is actually a good thing for MansaX. In fact, you should be more relaxed when there's higher volatility because then there are more options for us, okay? Because sometimes due to lower volatility, then sometimes we become more defensive and you might actually find yourself making a lower return when there's low volatility. I'll give you an example. During the last 2 months, we've seen much lower volatility in the markets, mostly due to the lockdown. So most major financial markets were on lockdown. And because of that, then we had slightly reduced returns compared to a month like March, where investors were very worried and were thinking, we should lose money, but we actually made outsized returns in March. So volatility is actually a good thing for us, and we still have very strict volatility limits within the fund that prevent us from entering a trade if it surpasses set volatility limits. Okay, that's why, for example, you'll find last year during Brexit, we did not trade the pound against the dollar much because the volatility exceeded the set internal limits. And again, just to emphasize, due to the fact that we can actually short markets, sometimes when you have a crisis, such as what you saw with COVID-19 and the market started selling off, we quickly took advantage of falling markets and shorted that. Now, again, you would not be able to do this if you are invested in a long-only fund. You can only be able to take advantage of such a move if you are in a long-short fund, such as MansaX. So if you're invested in MansaX and you're watching CNN in the morning and you hear there's a global markets collapse, you would just take your coffee like nothing. In fact, you might probably be excited about it. Whereas anybody else who had invested in a fund that just buys stocks and does nothing else, you would be quickly calling your fund manager, and worrying about whether you had lost all your money. And now that is another huge advantage of it. Of course, you'll never see the advantage of investing in a global multi-asset strategy fund like MansaX until markets are not performing as they are expected to. And that will always happen in cycles. And in 2020, we look like we're in that cycle where there are a lot of factors that might actually lead to the markets having a downturn. But even if they don't, it doesn't mean that we still don't make money for you. Right now, we have found that the Federal Reserve, for example, is pumping in a lot of money. They're printing money to keep the stock markets up. And this is happening also because it's an election period. And until Donald Trump is re-elected, the stock markets might continue going up. But this is very artificial. But fundamentals will always come into play at some point. And when that happens, Mansa will still be ready to make money for investors. So that is it. So that right there in front of you, you have our location. We are at Jekwa Towers. It's formerly ICA building. We're on the 16th floor, and our numbers are there. And you can reach out to us. Maybe you can just write that down in case of anything. And our email address is there. So anytime you need any clarification about anything from my presentation today, you can call those numbers or send us an email. Thank you very much. Renu, I think I'm ready to take any questions now. Thank you.
Thanks, Nahashon. That was actually a refresher for me as well. Is there someone that wants to ask any specific questions before I go through the questions that I have already gotten from the members? Inderjeet, do you want to ask? I know I saw you like jotting down notes. Is there something that you want to ask before I go ahead and ask some of the questions?
Yeah, sure. On the investment, you mentioned that you could actually access your funds when you require them. Like, say if you have an emergency or something. Does that affect your return at any point?
All right. So one of the reasons why it does not affect our returns is because now we are a much larger fund. So when we were a smaller fund, it was a bit of a concern. Okay, because then we'd have some open positions that would then be affected. But unless we have a run on the fund, we would not have the return on any particular individual investor being affected by withdrawing from the fund. No, we don't expect that.
Okay, and then secondly, on investments, do you let your clients also dictate to you as to what asset classes they could invest in, or is it like the way you mentioned, it's automated? That you have your split on your.
All right, so to answer your question, no, we don't allow our clients to choose the asset classes to invest in. it's purely discretionary. And there's a reason for this. Due to the changing volatilities in markets, and the volatilities change, I mean, minute by minute, hour by hour. What might have been suitable at 8 o'clock in the morning might not be suitable for an investor at 4 p.m. maybe because of, say for example, a client has asked us to buy oil on their behalf, and then suddenly, like what you saw the other day, there's a flash crash in oil. How do we then start reaching out to the client at that time to then change their portfolio? It might become too complex, not only for us, but even for the client themselves. And we feel that we charge you a significant enough fee not to let you go through the ulcers of making those decisions.
I think one final one for me. On your returns then, are they subject to taxation?
So right now, because we are categorized as a capital markets product, we actually tell our clients that there's no taxation involved. The only thing we'd advise our clients is when you're making your tax returns, it's good to list your return from MansaX, and then just get advice from your tax consultant. Just make sure that you list it as part of your income.
Nahashon, I have a question here from one of the members who says, you are regulated as a bank by CMA and not CBK like other banks. How so?
All right, so we are not a commercial bank. So the Central Bank of Kenya regulates commercial banks, and these are the banks that are in the business of taking deposits from customers and then giving out loans. Those are commercial banks. So we are an investment bank, which is now a completely different type of bank. So we are in the advisory business, and we are also in the transactional and execution business. So that's very different from what a commercial bank does, and that is therefore regulated by the Capital Markets Authority. So think of the difference between what Equity Bank does and what we do as SIB. So Equity will not be in the business of buying and selling shares on your behalf, or advising a company to do a rights issue or an IPO. So they are regulated by CBK. They're a completely different type of entity. But we are in the business of managing our clients' investments, and therefore in the capital markets categorization, which now is run by the Capital Markets Authority. I hope that answers it.
Yeah, I think that does. Secondly, we have a question that says, are the returns subject to withholding tax? You charge a fee of 5%. Is this based on investment or the return? So is it charged on the investment or the return?
So again, on the withholding tax, no, there's no withholding tax on your investments at all. Okay, any withholding taxes that are paid within the fund in anything that we have invested in that has a withholding tax component, we have already paid for investors within the fund. Okay, so that has already been taken as we state our 24% return. It will probably be higher if we hadn't made those payments. And in terms of our fees, it's based on the assets that you have invested with us. So if you invest 1 million shillings into MansaX, then the fee would then be 50,000 shillings, prorated over 365 days. And then we have a performance fee. Sorry, I forgot to mention this. We have a performance fee of 10%, but this performance fee is based on us exceeding a return of 25% annualized. So if we made a return of say 30%, then we'll charge you 10% of 5%, which is a return above 25%. So clearly we have never charged a performance fee yet. Although for some clients we have. Like I said earlier, what we quote is an average, but some clients can have more than others based on the time.
Let's hope there will be a time when you can guarantee us the 30%, Nahashon.
I hope so too.
Is the 24% an average, is a guarantee or not? And the 5% fee, is it based on, I think this is kind of, so is the 24% a guarantee? And then again, just clarify what the 5% is being calculated on exactly.
All right, so the 24%, we don't like to use the word guarantee because, and I'd even advise the members of RYA to be very careful with anybody who uses a word guarantee on them, because the best a money manager can do is handle your money as conservatively and as carefully as possible. All right, and with that we do, and we even during the most turbulent periods, we have still given our clients returns. So we like to think that 24% represents a return that we can reasonably give to our clients while protecting downside risks. But we will never use the word guarantee. In fact, if we use the word guarantee, we would be in problems with the Capital Markets Authority. It's completely illegal to say that. There's a reason for that. A number of factors in capital markets can lead to losses at one time or another. Okay, and it will be very irresponsible of us to misrepresent to clients that we can absolutely guarantee a return of 24% and nothing can happen to their funds. That would be a misrepresentation of how markets function. And as SIB, we like to be very careful to always speak with transparency, because we are not trying to ruin our reputation as a 25-year-old investment bank. Then just on the fees are charged on the amount that's invested. Sorry, just to repeat that. So for example, if we made a return of 25%, and at the end of the year, then your absolute return would then be 20% because of your fees. So just to clarify that. Yeah.
All right, and what is the expected return for Q2? Because the data that you've shared with us is up to Q1.
Yeah.
I know we have 1 more month to go, but then what is the expected? What is it looking like for the quarter, the second quarter?
Okay, for Q2, so the first quarter we had about 24.5. We project that we'll have about 20% in Q2. The second quarter of the year, traditionally for us, has always been a slower period. You have a lot of trading activity reducing because of the spring break that usually happens in the US, which reduces the amount of liquidity that you have in markets. And this year was further exacerbated by the fact that most of these economies were in lockdown. But we still feel that 20% return for Q2, which is what we project we might have, is still a reasonable return for Q2. Our best quarters are usually the first quarter of the year and the third and fourth quarter of the year. Q2 is usually our slowest.
So what's the difference between other investors like Alex Bank or Sterling Bank, which invests in shares? I'm guessing that it's asking for the difference between what SIB is doing and what the other banks are doing when they invest in shares.
So the only difference between us, so if you take an investment bank, so Sterling is a legitimate investment bank as well. The only difference is that now they do not have a fund manager license to invest on behalf of the investors. So for example, SIB can take money from Inderjit, but he cannot take money to Sterling Investment Bank for them to trade on his behalf. So we are the only ones licensed to do this as an investment bank. So that's a unique license. So it's actually a separate license on top of our investment banking license. So if you wanted to take your money to Sterling Investment Bank, I have 10 million shillings, it's Sterling Investment Bank, can you trade on my behalf? Can you buy and sell different asset classes and give me a return? They tell you, no, unfortunately, we do not have the license to do that for you. But we as SIB would be happy to take your money because we are licensed to do this. So that's a major difference.
And also to add on to what Nahashon has said, is that not only to invest in normal stocks, but the fact that we have a money manager license that exposes to global assets. No other, not only any other investment bank, but no other fund manager can be able to do that as right now, as we speak, because we're the only ones who've been given that license. Just to add on to what Nahashon has said.
Okay, Rennie?
Nahashon, this is a different that came earlier when we first started the session, that a lot of these funds in the market we have again, I don't want to mention any names, but we have the Titan fund, we have this fund and that fund. And so what's the difference between this fund and all these other funds that are promising certain kind of returns? Why would someone go with MansaX and not something else which seems to be giving at least conservative returns? So maybe like a 12-13%, similar to what most banks are offering. But why would you go with this? Because the question I'm thinking at the back of my mind, to be honest, is always, what's the catch?
Yeah.
What's the catch? Why is this so high? I know you've told us a number of reasons why, but is it stable? Is the question. Is it something that like after 2 years, what's the catch?
All right, so that's actually a very legitimate question, and one of the things I like to say is, even just back to the return, when we talk about a Kenya shilling denominated return, if you look at the depreciation of the shilling and the inflation figures for the shilling, a lot of the figures that are quoted are not representative of the actual risks most investors would be faced with. So for example, I like to quote things like medical cost inflation in Kenya is close to 20%. Okay, the cost of private schools goes up by about 10% every year. And I don't even know where they pick that figure from, but most private schools. So a lot of the figures that we quote and use to justify the returns that others make, they are approaching 20 or even exceeding 20% is therefore an outsized return. But for the Kenya shilling, we like to say that it's not, because this is a Kenya shilling fund. If we were talking about a dollar fund, maybe that would be a different case altogether. But this is a Kenya shilling based fund. And strictly speaking, if we were to go into the economics of it, the Kenya shilling over time loses a lot more from an inflationary perspective. And therefore for us in Mansa, we feel we cover these risks. But just going back to the return, how do we make a return, therefore, that seems to be higher than these other funds? And are we taking outsized risks? No, we are not. A big factor of why our returns are higher is because, number one, we trade a lot more instruments. It's that simple. A lot of fund managers in Kenya, if you're talking a money management fund, for example, like I say CSE money market fund, they can only ever invest in government bonds or placing money in banks. We can do the same thing. So we can invest in government bonds. We can still place funds in banks. But on top of that, we can still buy gold. We can still short oil. We can still buy and sell various world currencies. And that gives us a certain edge. So we don't necessarily take on more risk. We just have more assets available to us. And that's one of the reasons why we have a higher return. So it's absolutely nothing to do with more risk taking by the fund. No. And we feel that moving forward, as interest rates continue to reduce in this country, right now, even a lot of the funds that you might be saying are conservative and are giving you returns of about 10%, you will most likely see these returns dropping. We are seeing a lot of liquidity in the markets that causing interest rates to reduce, and over-reliance on government bonds is actually one of the things that the regulator has pointed out as something that needs to be changed. Even as recently as this week, they even came out to say that they also want these same funds that invest and are over-reliant on government bonds to place their monies in other asset classes, which is something we're already pioneering. So we're already doing something that now the regulator is pushing other money managers to do. So you will soon see different yields being quoted by them. So Renu, there's no catch actually. It's the catch is that we've actually just diversified better and gone for more instruments, and because of having more instruments, we are giving you a better return. That's it. There's no catch.
Yeah, there's always this thing at the back of your mind that says, wait, why if it's nothing, there's no catch, then why hasn't anybody else done it already? what's going on? But
and by the way, Renu, sorry to interrupt you. And actually, there are people who've tried this before, except a lot of the people who have tried to invest in online forex have done it in such a way that their risk management styles were very different from what we're doing. All right, so making their models very unsustainable. So we are a 25-year-old investment bank. So before we got into a product like this, one of our biggest concerns were, are we creating something that will create returns sustainably for our clients while still managing downside risks? So we are in this for the long haul. Yeah, we are not here to do something and leave after a year or 2 or 3 or 5 years.
Yeah. The other question that we have is, in terms of how you're trading, if somebody wanted to understand better what you're doing so that they have that satisfaction to understand, okay, my money is being done in this way, as much as you're saying, that you're only, this is how you're managing the risk, you have limits, you have this, but then to see it in action, if somebody wanted to do that, is that possible? Can we try to understand the thing a little better, or?
Yeah, I don't see why not. In fact, one of the ways would be probably just to visit our offices, and it would be fun actually to show them how we do it, and we are open to that.
And also we can share the fact sheet that shows the months to months and how the performance is and the diversification within the portfolio, or if anyone wants to appreciate how the fund is structured.
Yeah. We have a couple more questions. What is the minimum period for investment? I think it's 6 months. The minimum lock-in period is 6 months.
Correct.
Yeah, and what is the process for commencing trading? Is it like a complicated process where we need like a CDA account, or what happens?
So it's actually a very simple process. You would simply be onboarded into Mansa like a client, and we have account opening forms which can be sent over to you. We do a little bit of KYC due diligence to just comply with money laundering rules, but all this is a very simple process. If you reach out to us, if you get your email address, we'll send all the necessary forms and documents to you, and any request for documentation that we'll need from your end. And this process should not take longer than a day for most of our clients.
There's another question. Would it be possible to know your last 10 years of performance? I'm not sure. I think the person means in general. As a bank, are you a stable bank? If I'm not getting this, if I'm not reading into it in a different way.
Yeah, so I mean, the Standard Investment Bank for over 25 years has advised the largest transactions in the country, in the capital markets that you know about. Things like the Safaricom IPO, which was the largest, that was still us, Kengen IPO, most rights issues and bond issues that you have seen. Very recently, the Acorn Green Bond issue, that was us. So there's so many transactions that we could actually go into just to demonstrate our proficiency over a 25-year period, and we have proven this over time. The Mansa products in itself, I mean, the regulations around this and the licensing for this kind of a product came out in 2017. It took us, and even before they came out, there was already a draft before that. So because it took us about 2 years just to get a license to do this, which came out in the tail end of 2018. So the fund has really just ran for about 1.5 years from now. So, but the track record, as mentioned earlier, that's when I quote 24% is the average that has been returned over that period.
I think that's most of the questions that we had. There's been a lot of questions on taxes. People are worried about what happens with taxes. People are worried about the stability of the fund, transparency of the data, what happens. One of the questions that I can see maybe is not been asked directly, but is something that I think is on a lot of people's mind is, so when you said that you set a limit of risk to the fund.
Yes.
Is this something that you agree with the client, or is it something that you decide from your end? Because I saw something like 75%. Well, what if the client says if the fund value goes below 80%, I want out. How does that work?
Oh, okay. So first of all, we like to categorize all our clients as low risk clients. Okay. We eventually we are looking forward to creating another fund, different risks. So a fund for high risk investors, a fund for medium risk investors. But right now, we like to assume every investor is actually low risk, because we were also trying to prove this concept, and we feel that we've proven it so far. And the concept that we're trying to, when you say that we categorize everyone as low risk, therefore it means that we put capital preservation as the #1 priority when we're running this fund. So to answer your question, can a client put in a certain parameter that's different from other clients? Absolutely. You can come and tell us, if my fund falls below 90% or below 10%, therefore it's at 90%, reach out to me and inform me. That is something we can actually do for you, because we allocate a relationship manager to every client who joins MansaX. So this is something we can do for them. But again, we like to think that we like to think that all our clients are actually low risk clients.
All right. One more question is about KRA, because in terms of taxation, as much as you're saying that there's no withholding, but then there could be the income tax part of it that you'd have to maybe discuss with your accountant or somebody to advise you better. But from what you've seen, what is KRA's perspective on the fund itself? What have they said so far about the fund, and how do you report to them in terms of accountability? How do you report to them and say, this is what our fund has made? Or how does that disclosing happen? What happens between you and KRA?
So CMA, who is our regulator, has always been very supportive around the tax issue. Okay. In fact, just about 2 years ago, the KRA had tried to implement the capital gains tax on capital market securities, and they implemented it for about a year, and they eventually had to scrap it, because when you're not trading in a guaranteed product, okay, you see, MansaX is not a guaranteed product. How do you tax a non-guaranteed product? Because if there was ever a loss, do you then return the taxes to the client, or how does it work? So based on this alone, KRA has actually kept out of MansaX. Okay. And have we had any communication, or rather, have they reached out to us and told us that we need you to handle these taxes in such and such a way? We actually haven't had that kind of interaction with them, because we still prefer to go through our regulator, because it's a much more safer route. Because right now, if we try to engage the KRA and have a conversation with them around taxes, then most likely then they'll say, yes, we're going to tax all the returns, because they don't understand the product. But if it comes from the regulator will tell them, no, this is a capital market security. It has an unguaranteed return, so therefore we will not allow you to tax our participant in the market, which is us now. So that is one of the advantages of being in a regulated product.
I think that's a really good way of looking at it, because I think if you're getting a 24% return, your first question is how much is KRA gonna come get out of that? So you're taking 5% or whatever, and so the net that comes to me is 20 at the end of the day. If you're getting 25, then you get the 5, and I get the 20. So then what is KRA? And then I'm back to the 13% that I was supposed to get from any other place. What's the way?
What's the advantage?
One last question. So you said something about the dollar return and how the dollar going up and down has affected the fund. Should the dollar not be stable in the future against the Kenyan currency, how do you then decide to manage that risk? How do you then trade to make sure that the return for the investor is still secured? What does that look like?
That's a very good question. So within the fund, we use all manner of derivatives to protect ourselves against currency fluctuations. So everything is adjusted for FX exposure. So we get into forward contracts, we get into swap contracts, we get into option contracts. These are various types of derivatives that hedge an investor from any volatility in the dollar against the shilling. And it's not just the dollar, because at any one time we also invested in euro-denominated assets, invested in pound-denominated assets, and we have all manner of derivatives that actually hedge out that risk. And actually, that's a very good question, because it's actually because of some of these hedging costs. I'd actually say that if we were less concerned with FX exposure and we did not hedge out some of these returns, some of these volatilities, then you'd actually see much more volatile returns in the fund. So we already take care of this intrinsically in the fund. Actually, I want to throw this in that my background is actually derivatives trading. So it's something that I take very seriously.
All right, good to know, Nahashon. I think one final question that I'll take is, so a lot of the people that invest, of course, as an individual is something aside from, but what other groups can invest? So can I invest, for example, as a SACCO? Can I invest, for example, as an NGO? How does that get managed?
Oh yeah, absolutely. So we've had entities reach out to us like that, and we have actually onboarded a few. And so if you're investing as an NGO or as a SACCO, obviously this is based on your internal policies, and just make sure that you're within. That becomes entirely up to you. But can we take institutions? Absolutely. And therefore, it's within your institution to know, have all your members agreed to this investment? Do you have the necessary sign-offs? But we as MansaX are very happy to invest on behalf of institutions of all types, whether SACCOs, NGOs, investment groups, or even just some informal groups that you might create from time to time. And we have done this for other groups.
Okay. I'm sorry, everyone. My apologies to everyone that we've actually run overtime for the call. Was supposed to be about 8:30. It was supposed to end 8:30, but we're almost hitting 9. My apologies for that. I want to thank Inderjeet, Teti, and Indapran Bara for working, to be honest, effortlessly to try and get people to attend and get the information that we're getting today. So thank you again to the team. If you'd like to reach out for any other questions that you might have, any point, or if you want to understand the process or you want to understand the product a little better, please reach out to us. You have all got possibly the email from the registration link that you were sent. You can write to that email, or you can write to info@sib.co.ke. And if you have any other feedback that you'd like us to have, maybe you want us to share any other information in the future with you, please let us know. If you want to sign up for some of the newsletters and the fact sheets and the data and the research, that is also something that we can send through to you. Basically, we would want to have a very involved relationship with the community. So feel free to ask any questions that you have, whether they're related to MansaX or not, just to investment in general. You can reach out to us. For making time. Hope I didn't cut into your dinner.
No, thank you. Anytime. Happy to do this.
All right. If there's no other questions, thank you so much, everyone. And we will post a recording for the session as well as the deck on your email, and we will also post it on the RYA platforms. Thank you so much, and do have yourselves a good night.